Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of Christ Church Radio. My name is Ayodeji Ebo, an investment professional. This week, the focus is on the implication of the Russia-Ukraine war on Nigerian consumers, the capital market, and the economy. The war between Russia and Ukraine has intensified despite global condemnation and sanctions on the Russian economy. As both countries play strategic roles in global trade, especially Russia, the international sanctions will significantly impact global commodity prices. Hence, we thought to highlight the implications of the war on consumers, the capital market, and the economy in Nigeria. So, what are the likely implications? 1. High petroleum product prices. Russia is the second largest producer of crude oil in the world and accounts for 8% of global oil supply. This explains why global crude oil prices climbed to over 119 naira per barrel, a 10-year high last week. Expectedly, this will directly impact the prices of petroleum products such as petrol, diesel, kerosene, gas, and so on. While petrol is fully regulated in Nigeria, that is, price is fixed and subsidized by the federal government. Other energy prices, diesel, jet fuel, kerosene, and gas, are fully deregulated, which means price is determined by the prices of crude oil. In Nigeria, it is estimated that energy cost accounts for over 35% of production cost, implying a major increase in the cost of production of goods and services. The full or partial cost increase will be passed to the consumers, leading to further pressure on the purchasing power of the average Nigerian. This may lead to a higher inflation rate. 2. Rise in wheat prices. Wheat is typically milled into flour, which is then used to make a wide range of foods, including bread, noodles, pasta, biscuits, pastries, cake, and so on. Ukraine and Russia both account for approximately 30% of global wheat supplies. Hence, supply disruption due to the war has led to wheat prices hitting a new 14-year high last week at $12.89 per bushel. Domestically, wheat flour increased by 28.6% year-on-year in January 2022, as well as the price of bread 500 grams rose by 27.8% year-on-year in January 2022. The recent rise in wheat prices, which will impact flour prices, will lead to a further increase in the prices of consumer products, for instance, bread and noodles. This implies more pressure on the income of Nigerians. 3. Potential major review of electricity tariff. Gas is a major input in the computation of the electricity tariff. Natural gas prices rose year-on-year by 94.6% from $2.67 per cubic foot on March 8, 2021 to $5.01 per cubic foot on March 5, 2022. This means that Nigerians will pay more for electricity if the high gas prices remain for a prolonged time, implying a higher cost of living for Nigerians. 4. Higher government borrowings. The spike in global oil prices will increase fuel subsidy payments, reducing available funds to the federal government. This will lead to more borrowings and reduce the government's ability to fund capital expenditure. Higher government borrowings may translate into higher interest rates in the second half of the year based on the expected lower financial system liquidity level. 5. Capital importation. Russia accounts for a meager 0.4% of total capital importation to Nigeria in 2019 and has not recorded any capital inflow to Nigeria since 2020. This implies that the current war will have no impact on capital importation from Russia. Also, on a global scale, capital importation has dropped significantly to Nigeria from $23.9 billion in 2019 to $9.7 billion in 2020 and $4.5 billion as of September 2021. This indicates that capital flow, both portfolio and direct, has already shrunk in the past 2 years. Hence, we do not foresee any major impact on Nigeria in the short to medium term. 6. Fixed income markets. We do not foresee any major sell-offs by foreign investors in the short term due to less participation in the last 2 years. As a result, the direction of yields will still be premised on liquidity level and government borrowings in the interim. However, investors in Nigeria's Eurobonds are concerned about dwindling external reserves in a rising oil price environment. This has led to a rise in Eurobond yields in recent times. This signifies that Nigeria will pay more for any new borrowing in the international market. 7. Stock market. Domestic investors account for 77.1% and 66.4% of total activities in 2021 and 2020 in the Nigerian stock market. Hence, we do not anticipate any major volatility in the Nigerian stock market. The major downside remains the upcoming 2023 election. Kindly listen to the episode on investing in the volatile market for a better understanding of how to navigate the domestic and global stock markets in this challenging time. Link inserted. Overall, the effect of the Russia-Ukraine war will be devastating for Nigeria and the globe as a whole if not resolved in the near term due to the significant role both countries play in global trade. Thank you for listening. Please join us same time next week for another exciting and interesting session. For comments and feedback, kindly forward to ccradio@rccgchristchurch.org or send SMS to 070-8246-3747. Stay blessed.